The $79 billion ecosystem of luxury horology spans three interconnected markets, where a single watch can sell for $50 on the gray market or $50 million at auction. This is the world where authorized dealers, gray market platforms, and auction houses compete, collaborate, and sometimes clash, reshaping how we buy, sell, and value timepieces from the holy trinity of Patek Philippe, Vacheron Constantin, and Audemars Piguet to more accessible luxury brands. The numbers tell a remarkable story. The global luxury watch market reached $47 billion in 2024 and is projected to hit nearly $80 billion by 2033. But what makes this industry fascinating is not just its size, it is that we are not looking at one market. We are looking at three distinct ecosystems operating simultaneously, each with its own rules, players, and price dynamics. Let's start with the foundation, authorized retail. This is where brands like Rolex, Patek Philippe, Vacheron Constantin, and Audemars Piguet intended their watches to be sold. Authorized dealers sell at manufacturers' suggested retail price, provide full warranties, and maintain direct relationships with the brands. Sounds straightforward, right? It is anything but. The authorized dealer world has transformed into a theater of artificial scarcity and relationship management. Take Rolex, which controls roughly 30% of the luxury watch market. Despite what many believe, Rolex authorized dealers do not maintain formal waiting lists. Instead, they operate what industry insiders call VIP lists, carefully curated databases where preferred customers get first access to coveted models. The system runs on purchase history and perceived loyalty. Want a Submariner or GMT Master? You might need to buy jewelry first, or less popular Rolex models, or other luxury goods. It is a game where spending $50,000 on items you do not want might earn you the privilege to spend another $20,000 on the watch you actually desire. But here is where it gets interesting. Those wait times that seemed impossible just 2 years ago are shrinking rapidly. The Submariner wait time dropped from 105 days in 2023 to just 60 days in 2024. The GMT Master 2 fell from 180 days to 90 days. The Explorer saw the most dramatic change, a 66% reduction from 90 days to just 31 days. Why? Because we are witnessing the end of the pandemic watch boom. According to the Federation of Swiss Watch Industry, Swiss watch exports fell 2.8% in 2024, marking the first decline since 2020. Authorized dealers are even removing those dreaded exhibition-only signs from their display cases. The artificial scarcity that defined the past few years is finally breaking down. But while authorized retail struggled, the gray market exploded. The gray market consists of new, unworn watches sold outside official brand channels. These are not counterfeit or stolen, they are genuine watches that found their way into unauthorized distribution networks. Here is how it works. Authorized dealers must often purchase large quantities of watches and typically are required to stock less popular models alongside the hits. When dealers cannot move inventory through official channels, they sell excess stock to gray market dealers. These watches then appear on platforms like Chrono24, Jama Shop, and Watchbox at significantly different prices than retail. The price dynamics are fascinating and counterintuitive. Less popular luxury watches often sell for 20 to 30% below retail on the gray market. A Tag Heuer Carrera chronograph with a retail price of $7,450 sells for around $5,000 on the gray market. That is a 30% discount. Even the legendary Omega Speedmaster professional moonwatch costs 31% less on the gray market. But flip the equation for truly coveted pieces. During the height of watch mania, popular Rolex sports models sold for 50 to 100% above retail on the gray market. A Daytona with a retail price of $14,000 might command $30,000 from gray market dealers. The gray market was not offering discounts, it was revealing true market demand. Chrono24, the largest gray market platform, sees over 9 million watch enthusiasts search for timepieces monthly. Their CEO, Tim Strack, says that now they realize that we are just the ones that made prices transparent for our users. The gray market did not create price distortions, it exposed them. The third pillar of this ecosystem is auction houses, where the real spectacle happens. Phillips, Christie's, Sotheby's, and Bonhams don't just sell watches, they create legends and set records that ripple through the entire industry. In 2024, we witnessed some of the most extraordinary auction results in horological history. A Patek Philippe Grande and Petite Sonnerie with minute repeater complications sold for $17.75 million at the Only Watch charity auction. An FP Journey prototype created in collaboration with filmmaker Francis Ford Coppola reached $10.75 million. Even a Rolex Daytona Paul Newman, the John Player Special, commanded over $1 million. But auctions aren't just about record-breaking prices. They're about storytelling and provenance. Sylvester Stallone's Patek Philippe Grandmaster Chime with perpetual calendar and minute repeater complications sold for $5.4 million at Sotheby's, not just because it is an extraordinary watch featuring some of Horology's most complex mechanisms, but because it belonged to Rocky Balboa himself. Celebrity ownership, historical significance, and rarity combine to create values that transcend mere craftsmanship. The auction market also serves as a crucial barometer for the entire industry. When auction prices for vintage Rolex rise, it signals broader strength in the brand. When contemporary pieces start appearing at auction below retail, it suggests oversupply in the primary market. Christie's head of watches, Remy Gilliman, noted strong demand for independent watchmakers and watches with provenance, revealing shifts in collector preferences that eventually influence retail strategies. What makes this ecosystem truly fascinating is how these three markets influence each other. When Rolex launched its certified pre-owned program in late 2022, it was not just entering the secondary market, it was challenging the gray market and auction houses at the same time. By partnering with Bucherer, which it later acquired entirely, Rolex gained control over both new and pre-owned distribution. The certified pre-owned program offers manufacturer warranties on pre-owned pieces, authentication guarantees, and standardized pricing, directly competing with gray market platforms while maintaining brand control. It is a strategic move that allows Rolex to monetize the secondary market they previously ignored. But this integration comes with controversy. Critics argue that Rolex's certified pre-owned launch, coming after astronomical market highs, looked opportunistic. To buyers priced out of new models, it appeared as if Rolex was monetizing the very supply and demand imbalance that created accessibility problems in the first place. The pre-owned market itself represents perhaps the most dynamic growth area in horology. Valued at $24.9 billion in 2024, it is projected to reach $63.7 billion by 2034, a growth rate of nearly 10% annually. By 2030, industry experts predict the pre-owned market will represent more than half the size of the primary market. This growth is driven largely by younger demographics. 20% of individuals aged 18 to 24 express interest in purchasing luxury watches, compared to just 11% across all age groups. These younger buyers are more comfortable with digital marketplaces, less concerned with buying from authorized dealers, and often view watches as alternative investments rather than just luxury goods. The investment angle has become increasingly important. While secondary market prices fell 5.7% in 2024 after larger declines in previous years, watches still outperformed many traditional asset classes over longer time horizons. Collectors and investors view rare timepieces as tangible assets that can appreciate while providing daily enjoyment, something stocks and bonds simply cannot offer. Technology is reshaping all three market segments. Digital authentication tools, blockchain provenance tracking, and AI-powered valuation systems are making it easier to verify authenticity and determine fair market prices. Platforms like Watchbox, which raised over $250 million in funding, including investments from Michael Jordan, are blending technology with traditional watch expertise. As we look toward the future, several trends are reshaping this ecosystem. The artificial scarcity that defined recent years is dissolving. Younger buyers are driving pre-owned market growth while being more accepting of gray market purchases. Brands are increasingly entering secondary markets directly, competing with platforms they once ignored. The three pillars of horology, authorized retail, gray market, and auctions are evolving from separate entities into an integrated ecosystem. Success in this market now requires understanding not just one channel, but how all three interact, influence each other, and create opportunities for both buyers and sellers in the fascinating world of luxury timepieces.